Hi ladies and gentlemen, it's my pleasure to oversee this presentation for you that features the US dollar against the Japanese yen. Before we go into the technicalities of this trading opportunity, may I refer you to our previous video that is also designed for trading this week that features the Great British Pound against the Swiss franc. Set before you is the monthly chart. We will also be analysing the daily chart and also the hourly chart to see where the trading opportunity exists in this market. Some of the features on the monthly chart is this descending resistance line and also this support line. And that is probably the main reason why we've been in a period of indecision over the last 4 months. And typically what will happen after a period of consolidation like this is you'll probably see a big up move or a big down move. It's unclear on the basis of this monthly chart whether the explosion will occur on the upside or the downside. But if we look at the daily chart and analyse that, you can clearly see what looks to be a head and shoulders pattern. You've got a shoulder, a head and a shoulder. What bothers me about classifying this as a head and shoulders is last week the market had every opportunity to bounce and break downwards, but it didn't. The market wanted to rally to retest this resistance area, and that leads me to believe that this is a little bit of a wedge pattern developing. Maybe it will act in the same way as a head and shoulders, but in any event, I think what is going to happen is the market will break down on the downside to test this support. The basis of that is you can see the market is hit the support. It's gone up to test the resistance area. It's done the same over and over. So even if you're quite new to trading, what do you think is going to happen next? On the basis of what's happened before, this market should go down and test support. That means we could have the potential of 2, maybe 3 or 4 down days in this market, depending on how quick the market wants to fall. If we sell this market now, we want to sell it at a high price. Would you agree that the market is at a high price at present? Okay, it's backed away from resistance slightly, but we could not sell this market on Friday. This is Friday's trading. We could not sell it on Friday, and I'll explain why when I show you the hourly chart. But this meets our classification for selling high, at least on the daily chart. If we sell the market now, it will be at a high price. So it meets our classification for selling. If we look at the hourly chart, this is why we could not sell this market. If you look, the trend is upwards. It's making higher highs and higher lows. The market has recently put in a higher high. We suspect this market will go low, but we do not know, because this area, if this area holds, you could go up and test this high. You could also go up and make a new high. So what we need the market to do is we need the market to break down and take out this support line. And how that will look is the market will fall and enter what we call the selling zone, because it will be bearish. It's not bullish anymore because we've taken out this support line. If the market moves down like this over the next couple of hours, can we sell the market then? Well, we could, but we would be selling low. We want to sell high. So what we would need the market to do is the market to come up and rally, potentially testing the back of this trend line. If the market does that, can we sell? Possibly. What we need to be careful of is we don't want to jump in and the market break through the support, break through the resistance, and go on and make a new high and take our stop loss out. If it does that, we would have sold low and bought back high, and that is the exact opposite of what we want to do. And so if the market does put in this high price, we need to build a counter trend line. If the market does not fall below the counter trend line, there is no selling of this market. What we need is the market to close on the hourly chart below any counter trend line. The moment it does is the moment we open a position and we sell this market. That way, the market has shown us that it wants to go down, and we are happy to capitalize on that by selling high. The target will be based on the daily chart. As already stated, the target should be around 112.05. Give or take the spread, that will be our target. There is every chance that this market could go lower, but I think that a few down days worth of movement in this leverage market will be enough for us, and then we can reassess. So I hope that you've enjoyed this presentation. Please do refer to our other presentations, and if you subscribe, you will be able to get a notification every time that we present one of these setups. If you have any questions or comments, please leave them in the comment section. And please, if you do take this trade, please let us know, because it's nice for us to know that other traders are capitalizing on our trading plans. Thank you for your time.